Welcome everyone to the Green Effect podcast. This is episode number 14, and we've got part 2 with George Dube and Peter Cuttini, partners at BDO Kitchener. They are, of course, my favorite accountants who specialize in real estate investors. So, part 2, we are going to talk about more audit stuff. Sometimes you just write the check, and Peter's going to talk about that. Trends in real estate that they are seeing. They're seeing more commercial, different types of setups. We're seeing it all. They're going to talk about it and their take on real estate investing, their funniest business story, and of course, as always, top 5 list in which George promised to keep to only 5 items. This episode's got something for everybody, and here we go.
Welcome to the Green Effect Podcast. Finance, life, business, and everything in between. And now, your host, Stephen Green.
One thing to come back to real quick, because obviously one thing you said is being audited is always deemed as such a bad thing, right? Give me a percentage of how many audits, process aside, right? For people got to go clear out their shoebox or whatever. But process aside, how many audits actually end badly?
Define badly.
We're paying out money because there was a massive screw up.
Paying out money sometimes.
Is screw up the right word?
That's a technical term.
Yeah.
It is.
But I will say paying out money sometimes is not a bad thing.
Okay, explain.
They found something. Okay, you were aggressive. They found it. Pay the money. You know, that's part of your penance.
Yeah.
Or it was a disagreement. Sometimes I tell clients who want to fight, it's not worth the money to fight. Write the check.
I have heard that.
Get it done. Just write. Forget principle. It's going to cost you 10 times more to fight it. Yeah. Why are we going down this path? Write the check.
And to that point, there can be a couple of things that you'll fight for $1, and others where it's a couple $1,000 or whatever. It just wasn't worth the time. If somebody's been accused of hiding money, well, that you're going to go to the wall for. But if we're debating the deductibility of some advertising costs or repair and maintenance item, as Peter said, you got to be practical with where you're spending time and whatnot.
Yeah, and a bad audit, you may not even pay money. A bad audit could be just them in there forever. Just the time you lose with them. Yeah, that's true. A bad audit.
I don't know what a percentage would be, but it's far, far, far less than 5%. Where there's going to be a major check written, and so I'm going to ignore a check for $25,
sure.
$500 type of thing. But those are few and far between. Not that they don't exist. I like to think that part of that is the accountants they choose to work with.
Yes.
But again, all seriousness, I think most of the time, provided somebody's organized and they, in all seriousness, are using advisors that are kind of looking for things that are going to stand out. It can be avoided in some cases, or alternatively, we may be preparing a set of statements and tax returns, and because something stands out, we'll say, this is something that wouldn't shock us in the slightest it gets audited. Let's just be ready for it. Mm-hmm. It doesn't mean it's wrong. It's going to get some attention, and it is what it is.
Give the example. This is going to sound silly, but you get clients. Oh, I definitely use my car 90% for my real estate business. Really? You've got one property and a full-time job and 90%. Like, are you taking the LRT every day to work? Or of course I use 80% of my house for my home office. Really, where are you living? You know?
Yeah, that's true. And I think that's things. As you guys are talking, I'm getting worried, man. I'm thinking, man, I better go back and double check some stuff. Now, I'm a pretty conservative guy. Like, I don't, and your firm does my taxes. So, if I'm worried, you might want to go back and do some reviews. But I think what you said is really important. It's maybe it's not a bad thing. Hey, yeah, you know what? You missed it. Maybe you're not actually using 80%, or maybe you're not actually using 50. It should be 40, and you owe us $100 or whatever, right? So maybe it's not a bad thing.
Yeah, those to me are...
They're immaterial.
Yeah, I'm more worried about how long they're going to be auditing your books.
Yeah.
It can be mentally absorbing because most of us are going to be thinking a worst case scenario.
I would be.
And absolutely, particularly most people very, very infrequently deal with the auditors, of course, and not trying to dismiss the importance of it, but because Peter and I deal with the auditors all the time, it's a management process more than anything. So we're not nervous about things. Yes, I mean, there's a couple of client scenarios at times where we wonder, okay, what is Revenue Canada really looking at here? Did we miss something, etc.? There's that natural little fear reaction in some cases. Mm-hmm. But again, the exceptional vast majority of times, it's really not a big deal.
Yeah. I'll give an example of this. Is from my previous life. I was dealing with a client getting audited. He was very aggressive. They were going through his meals and entertainment. And, oh, sir, what was this meal for? Oh, I took so-and-so out. Oh, sir, what was this meal? Oh, how about this one? Oh, I took so-and-so out. Oh, really? Date was February 14th, and the receipt said couples dinner. He took his wife out for Valentine's Day. And we all say that it's $100 or whatever. He was cheap anyways. But whatever it was,
Yeah.
now the auditor thinks he's lying. That auditor was in his office for 5 days going through everything.
Oh, jeez.
Like, was it worth it? Really? You know, like...
Yeah. And I used to do, in my former life, I was a compliance auditor. I would go into branches and audit their compliance. You're absolutely right. I tell clients this about underwriters. Guys, I tell them, we get points for presentation. Because remember when I used to audit, if I went in and it looked like a mess, I'm digging, man. I'm getting a coffee and I'm digging, right? Same thing when you submit a deal to an underwriter. Guys, we get points for presentation. If it looks good, they're gonna think you look good. I know what I'm talking about, and you got a better chance of getting this done.
Absolutely. I'll give you a personal example. My wife and I got audited a number of years ago, and
That must have been a revenge thing.
something like that.
Peter Cuttini, audit.
But my wife puts this package together. It's got tabs. It's referenced, cross-referenced across. It's a nice big binder. All the stuff they were looking for is in there. I had the auditor come to my old office, walks in and, shook his hands. Here's everything. Coffee's over there. Trying to be nice to him. 10:30 rolls around. Everything okay? Yeah, just going through it. Noon, I go by. Hey, if you want lunch, it's just down the street. Or what? He's like, there's nothing here. Shook my hand and walked out.
Fantastic.
Because it was all in completely. He's like, I got everything I need, and there was nothing.
Yeah, it's so true. That's the reaction you want.
Absolutely.
You don't want them. You don't want people digging, man. You just don't.
And if they denied a $10 something, I wouldn't have cared.
Yeah.
Just tell me.
Here's my check.
Yeah.
Yeah, exactly. Time, right?
Yep.
Time and money.
That's right.
Yep. You got to pick and choose between those two. So.
And advice I will give any of the listeners, that whether you're using us or another accountant, your first call when you get audited is not to CRA, it's to us.
Don't worry. Done.
Sure, or let us deal with CRA.
Yeah.
We know what to say and what, unfortunately, not to say.
But that's surprising. All kidding aside, you would have been my first phone call. Like, if I get that letter, I think I got a letter a few years ago when they were sending out those letters saying, hey, we're checking you out.
Their annual whatever thing they have to audit every year.
I remember I sent it to you, and I'm like, whoa, what's this? And you're like, don't worry about it. They're just letting you know that you could be... It was like a threatening letter. It wasn't threatening, but it wasn't. Like, you know what I mean? Like, it's
intimidating.
It could be you. I like that. Intimidating, yes. Could be you. This could be you next time. Right? So, but yeah.
And it's a choice of words. Probably one of the first years I was practicing, it was actually another accountant's client, but he was coming to me for tax advice, and so I was working with this client. And the client was, from everything I could tell, as honest as the day is long. Was trying to save some money, had a job where he was making today's dollars, say $40,000 a year type of thing. And he was accused of hiding, again, today's dollars, probably about $1 million. And the problem all arose because he was a relatively recent immigrant. So his language skills perhaps weren't as strong as they would be today. And he carried with him a pocket dictionary. I think it was Cantonese to English, and it was Webster's or something of that nature. And anyway, so he was being asked a particular question, and so he flips the dictionary open to look for the converted word. But the word that he used was speculate, which from a tax perspective means all sorts of different things.
Sure.
And then he showed me the definition, and it said it meant in terms of the conversion something to the effect of to do business. And so he didn't realize, again, and perhaps many taxpayers wouldn't realize just what that one word did, and sent him down an ugly little road. Now, again, everything got fixed at the end of the day, but it was quite the process. And had he had Peter or myself there on that first meeting to kind of control what was going on and be able to answer questions, I'm more than confident that this thing wouldn't have stretched out for as long as it did. But again, just one little word.
How many times we've had client experiences, we're in the room with the auditor and the client, and I've got to give the evil eyes to the client, like, shut up. You're saying too much.
Yeah.
You had already won your case. Now you're digging a nice big hole.
Yeah. Have you heard of the Fifth Amendment in the U.S.?
Yeah.
sort of the same thing.
Yep.
Are you seeing a transition into two things? And I'll ask the first one. So are you seeing people maybe switching into more commercial real estate? Do you see people that are maybe saying, okay, I have a couple of single families, maybe I want to go this route? Are you seeing that at all?
Depends on what you define as commercial. We're seeing a lot more multifamily.
Okay, so like 10, 12, 14.
Yeah, going in with...
I was going to say getting in together with people.
People and doing that, it's easier to get one mortgage than 10.
Yeah.
And it does deal with potentially some of the tax changes and what have you. So one, if it can be in some cases easier to get the financing for a sixplex as compared to a single family home. And yeah, maybe somebody doesn't have the cash available to do all 6 units themselves. Maybe they're going to go in with somebody else to do that. But overall, if that can start satisfying more objectives, I think I find it easier now to be working with those individuals because I don't have as many, I'll say, handcuffs from a structuring side. They're not as worried about some of the financing issues. So then, great, we can proceed along and do what we want from a tax perspective versus, particularly for some of the finance individuals that aren't comfortable using corporations, they maybe really be pushing that personal ownership, which from a tax perspective can cause all sorts of havoc, in not all cases, but in a variety of cases. Sure. So the sixplex and greater can be easier. I know we've seen more of it in the last 2 years. Yeah. And we get into the foreign buyers side of things, where some of those, again, once you hit that level for, depending on which area we're talking about, great. It avoids some extra taxes.
Yeah. And let's not kid ourselves. There's a nice, sweet marketplace out there between the 4 sixplex and up to a 40-unit apartment building. Because after that, you're playing a lot of REITs and private money, and you're just not going to win against them. Yeah. When pension plans get involved or REITs get involved, you're not going to win.
That's a different game altogether. Yeah. I'm getting more questions about it, right? Mm-hmm. People are hearing about it. They're, with it being so strict now on the residential side, because I know with us we do up to and including 6 units under residential, but now people are thinking, okay, if that's tougher, what does commercial look like? And I'm pretty sure that hasn't changed a whole heck of a lot. It's still commercial lending. It's different. People think it's scary, but it's different. It's there's some risk-based pricing there, and they appraise a little different. Fence. No, it's not. It's a little more numbers. I always joke I could never be a commercial lender. Don't have the patience. The amount of time it takes to turn around a commercial, I could not do it. Forget it. So I'm getting a lot of questions about that. So I thought I'd ask you guys if you're seeing it. Now, on the flip side of that, I just had my last podcast was with a gentleman who actually did a couple of properties for residentially here. And he now has his own podcast talking about a Canadian investing in the U.S. So I know you're certified in the U.S.
Yep.
as well, right? And he's finding all these great tenant rules, and I can have them out in 2 weeks without any questions asked. And we're buying properties for 40, 50 grand, and they're bringing in $1,200 a month, and so on and so forth. Are you seeing now people starting to do more of the U.S. stuff? And what would you advise to somebody who wants to start to play that game from a tax perspective? Because I know we gave out a ton of unsolicited advice. It was great. Disclaimer in that show. But what are you seeing? What advice would you give?
Let's not kid ourselves. Whether we like the man or not, Donald Trump's tax changes have definitely changed the game in the U.S. Mm-hmm. Before, owning small real estate in a corporation was punitive. Now it's not. It's about the same as owning it personally. So you're seeing a lot of that.
So better? Is that a better? That's a good thing.
He reduced the corporate tax rate significantly. And whether you can talk about the social and how they're paying for it, that's irrelevant to you as an investor. Yeah. All you care about is what's the rate. And it's really changed the game on that. It's a lot simpler almost now to invest in the U.S. The biggest advice I always give clients when we're talking about investing in the U.S., two things. There's no such thing as a U.S. market. You have to know where in the U.S., because if you want to invest in Naples, Florida versus downtown Detroit, those are two different types of properties.
Big time.
Two different everything. The second issue always is going to become property management. Can you get good property management? I'll give an example. We had a client. They lived in Alberta. They bought 2 places in Kansas City. Property manager can't rent them out. Sorry, not a good neighborhood. Can't rent them out. We're trying to put a new fridge in, and we tried to spruce it up. 6-8 months go by. They go down. Nothing was changed in the units, and the property manager's cousins were living in there.
Oh my gosh!
That right there, just
that's not good.
Yeah, and are you going to now have to engage a U.S. lawyer to sue them, and how much is that going to cost, and time, and
wow. So there's some homework. Yeah, and this gentleman, just Glenn Sutherland, had done quite a bit of research on it. And he's that type of guy. He's a researcher and doing it. So yeah, researching the neighborhood is really, really critical. Now, what about from when he was on? I don't want to get too deep into this, but he was talking about. I'm going to butcher this. LLCs and LLPs and
yep.
LCs. LC is different than an LLC and all that stuff.
You are butchering it. It's okay.
Okay, it's good. He was talking about the, and I guess it makes sense now because if taxation's better, people will do it for 1 or 2 properties. And him as a Canadian, it made more sense. Is that kind of what you see?
So we always used to see a lot of times people would set up limited partnerships or LLPs, depending on the state. With the new corporate, a lot of people just set up regular C corps.
He used that term too, C corp. Yep.
We don't recommend LLCs. We're great for Americans. CRA does not consider them a flow through, and they consider them a corporation. And unfortunately, you still might be involved with double tax if you're using an LLC.
Okay.
So just set up a regular C corp, and that might be the best way of owned by a Canadian corp, and you're done.
Okay.
I think the key is to recognize.
Get the right advice.
Exactly. Talk to Peter, let him coordinate with our U.S. tax team. All they do is U.S. taxes. So why not get that advice? Get it set up correctly. And again, I'm not a U.S. Tax person in the slightest, but my observations from a client perspective would be, not that we have a huge number of clients that are in the United States, but we certainly have a healthy portion. And my perception is those that go in with the ability and desire to own what I'll call a decent amount of real estate, I think do well for the most part. Those that go in, they're going to buy 1 or 2 smaller properties. I think the cost of compliance can kill them. And the
is more
frustration.
expensive. There's just no question of it. And I hate saying this, if you think CRA is difficult to deal with, don't mess with the IRS.
Yeah, I've heard that. So again, just do it right. Don't. I mean, you're not even a resident there.
Sure. I haven't seen this recently. I would say a few years, especially around 2008 when the American market crashed. We saw a lot of people. I can go buy buy something in Florida or something like
Buy
that.
one, get one free.
Basically, sure. Yeah. But they'd look at it and be, oh, great, I can live in it for 6 months and then rent it out for 6 months. You're going to rent it out in the non-peak season? Good luck finding people for that. Like, or, you know, oh, we're going to buy something we really like it because we want to retire there in 20 years. Yeah. And I'm like, no, buy a place in the U.S. that makes you the most money. And then 20 years, if you have to sell that to buy the retirement home, do that.
Yeah.
And if I could, from a Canadian perspective, we'll see, whether it's in the United States or you pick the foreign country, people will assume, unfortunately, that, okay, I'm investing wherever that may be. I pay my taxes there. I don't have to worry about what Revenue Canada thinks. Well, there are Canadian implications. Revenue Canada is very, very, very interested in knowing all about your foreign investments and certainly enjoys the opportunity of taxing them as well. So again, it's just remembering, yes, there's the foreign filings, whatever those may or may not be, and local as well.
Well, funny you say that. I was just about to ask that question. You got to have an accountant that knows both sides of the fence, because my question was going to be, I'm sure there's a ton of crossover with the two. I mean, I'm pretty sure CRA and IRS are friends somewhere, right? Where they know what's going on both sides.
They share information.
So, yeah. So, I mean, you got to have an accountant that knows what they're doing to report.
And if you
properly.
don't, the penalties are excessive.
Yeah, well, I mean, IRS, I don't know if it is with CRA or not. You never hear about it, but I'm pretty sure IRS, there's jail time for some of this stuff, I think.
It's a lot harder. They have to prove, you were fraud.
Okay, you were frauded out. You just didn't mess up a number here and there. Yeah. So, okay.
And it's possible, certainly, to go to jail in Canada for tax items. But again, usually it's maybe not outrageous, but repeated failures to file returns, defying what the judge has ordered, type of thing.
You know you were committing fraud.
Yeah.
You really. It's not I think this is deductible, and they say no. Yeah.
Now, in fairness, and it's been well published in the media, there's been some instances over the past year or two where the auditors have gone overboard, and there have been innocent people where they were potentially going to jail or paying huge fines. And so I certainly don't want to imply that that's the norm by any means. It is uncertainly, it is certainly not the norm, but it does happen even in Canada. Yeah. It's possible.
And you're seeing CRA being more aggressive in that they will issue an assessment, freeze your bank account, and then you got to unfreeze it and prove that they're wrong.
That we'll see a lot more.
Yeah.
Wow. In extreme situations, though?
No.
You don't get back to them in a timely manner.
Okay, so they've given you an opportunity.
They've given you 30 days to respond, and on day 31, they're seizing your bank account.
And we've seen a few too many instances where there was apparently a younger, less experienced individual involved at Revenue Canada. They accidentally sent the collections letters to the bank before they were supposed to. There's starting to be a whole lot of them that I would question whether just how organized that was.
Yeah.
But again, accidents happen. I get it, but there seems to be an unhealthy percentage that are occurring.
Yeah, and my wife and I watch prison shows in the U.S., so we would not want to go down that route. So.
Oh, that's a whole different video.
That's a whole other. Yeah, I think I've told you guys, I'm sure, a few times. Just but and of course I'm a client of yours, so I would say do my taxes. Just keep me safe, man. That's all I need to do. I don't want to go to jail, and I don't want to have an issue later on. So. Okay, so give me, I don't know if you have one or not. I don't know if accounting is really a funny business or not, but give me your funniest business story. You guys have been doing this a long time.
I'll give you one that just happened to me last week. A good client of mine, I was sitting down with him. Peter, I wasn't happy with my personal taxes last year. Okay. The year before I paid 9% tax, and this year I went to 13%. He could tell I was not caring. He goes, I really shouldn't complain, should I? Nope.
It's all perspective.
Yep.
It is perspective. It really does come down to that, eh? Yeah, absolutely. Yeah. We talk about that with interest rates with mortgages, right? I my line, my funny business story where, again, you start to do this for a while and maybe your sense of humor isn't shared, but thank God this person had that same sense of humor. But, you know, they were saying, well, you know, the other bank can give me 3.1 and you're charging me 3.15. And I said, listen, here's my mom's phone number. All right. She had a house in the 80s. Call her and I want you to argue this point with her. All right. And I didn't laugh when I said it. And he paused and he says, isn't that when they paid 20%? I'm like, yep. He's like, all right, I get it. Thanks.
Yeah, Don Campbell at Real Estate Investors Network always says this recently. People, if you are under 40, rates go up.
Yeah, exactly.
It's a fact of life. They will eventually go up.
Yeah. And I have this with my variable clients, right? They signed up to this great variable rate, and now they're asking questions. Well, the rates go up. Yeah, but we had this conversation when we started. I people watching on YouTube will see me shaking my finger, but we had this conversation. With RBC, your payments will stay the same, but the amount towards principal and interest could change. Can you sleep at night, right? Why aren't you sleeping now? Right? So, yeah, it's I like that line. Rates do go up. It does happen. So, okay, top 5 list. And I know you've got paper for this one. So give me your top 5 list to avoid being audited by CRA.
I didn't necessarily stick to 5, but I was just trying to just quickly chalk down
You
a
can't
couple
give
of
George a limit of 5.
Yeah.
Okay, I was going to say.
It's not fair.
He wants to talk much longer than that.
I mean, this is a whole separate topic. I mean, we could go on for a couple of hours.
I bet.
Yeah, we've actually done presentations just on this, and it was half an hour to 45 minutes.
Wow.
Oh, yeah.
So one of those items, and we won't go into the in-depth version, but being organized. So that we can put down the right numbers, we've got the information, or when there's quick, we were talking earlier about the audits, and if we're able to answer a couple of questions quickly, provide some receipts, for example, that's a whole different audit experience as compared to, that's going to take some time, and 3 hours later I might find a receipt, or 2 weeks, a completely different audit experience. Filing tax returns on time. Again, and not that we've all been guilty of filing something late, particularly if there's not a tax balance owing, but and it's not that it puts you in an automatic audit situation, but it certainly can get some attention. Mm-hmm. Asking for an adjustment after the fact. I mean, there's certain adjustments that they don't trigger any additional interest, and there's certain adjustments that absolutely, positively, practically guarantee an audit.
So it's something where it shows that you're actually proactive on your taxes as opposed to them having to dig.
Perhaps, or I forgot to include a $200 meals entertainment amount, and now I'm looking to adjust my tax return so I get a slightly bigger refund. Well, by the time we were done sucking away the time to do the adjustment, by the time you're done the audit, because that's virtually sure, there's more questions. And I wonder what else is in the tax return. I mean, that was truly a case where that $200 item could not possibly have been worth the aggravation, the attention, etc.
So people will actually come back with that?
Oh, absolutely.
Because I'm sure I've got that stuff, but I'm like, to your point, like time and energy and fees, like.
Correct. And again, a different where. I forgot I had a $50 T5 slip some interest from the bank type of thing. So Royal sent out my envelope and whatnot, or emailed it to me, or et cetera, et cetera. I forgot to put it in. Oops, bad boy. I admit it, my fault, no question. Yeah. Or get lost in the mail, again, whatever. Yeah, sure, we're going to send that and ask for the adjustment. Revenue Canada is good with that. I mean, they're going to ding you a couple bucks for interest. Everybody makes those.
Found it before you did.
Yeah. And it could be that's right. But anyway, so just asking for those adjustments again. We need to be practical with those. Other area of interest for in investors, as Peter had mentioned as well, there are real estate investor teams. So audit teams. And so they're going to be taking a look at things. Does this make sense?
They're good.
And carrying that one step further, I mean, whether we're a doctor, we're an engineer, we've got a corner store, whatever it happens to be, we're an employee and they're comparing expenses. Well, regardless of the nature of who we are or the nature of that business, they are going to be benchmarking you. And so if your meals and entertainment or automobile expense is significantly higher than the industry average, you're more likely to get those questions. There are certain deductions on the tax return that are much more likely to get interest from Revenue Canada. Maybe one of the better examples is the employment expenses. And not that it's an automatic audit, moving expenses gets a lot of attention too, where, again, and it's not to say that somebody's done something wrong, but it is to say, yes, that's a target item for them. And so knowing where, and this is where having the advisor prepare the returns, they may point out, wait a minute, is this really where we want to put some expenses? This may not be the area we really want to be aggressive with, for example. And again, so it's also part of kind of managing the whole process of what's going on. And again, not to say that it's wrong, just it may get some more attention than we were otherwise looking for.
Do you notice, and this is now, when you were saying some of that stuff, I was thinking, like I said before, I see a lot of tax returns and different accountants. And I think I've emailed you both questions about this with like the T776s, for example. So we run into that a lot, obviously. I'm noticing there's just different ways that it's done. There's one way where the boxes are filled out correctly. I know that sounds crazy, but I see that maybe 80% of the time. Other times I will see 4 properties on one T776. And I'm thinking, I know as the bank, we're confused. Never mind anything else, but we're confused, right? Or just things reported in the wrong box, right? We see that quite a bit. Is that stuff that they pick up on? Like, I mean, can you have 5 properties on one T776? As an example, right?
The form allows you to do multiples now. Like, I would never recommend putting all 4 as one number. Like, this is my total revenue. I would definitely separate it by property. I don't think we do that though. We will do a separate.
I know you guys don't.
Yeah.
I think there's been a couple of cases where we've started preparing the tax returns, but somebody else has prepared it for 10 years type of thing, and that's how they prepared it. So we've carried that. Again, Revenue Canada likes trends, even year to year. And so, yes, reluctantly, we've continued that a couple times, but I don't think we've ever done it ourselves.
We unfortunately had a situation where we had to get rid of a client because they want us to lump all 4 properties as one, and not from a CRA perspective.
Oh, right.
From a financing perspective, because they didn't want to say they had 4 different properties.
Oh, jeez.
And I was like, I'm not committing mortgage fraud. I'm done. We walked away.
That's right.
Good.
Yeah.
You need to.
Yeah. Like if it was separately disclosed.
Yeah.
Great.
Never even thought about that.
Yeah.
Jeez. Sometimes you joke I'm in the wrong business. Yeah.
That was a mortgage broker who gave that advice.
Good. That's that good. We got that recorded. No, I'm kidding. I'm kidding.
We won't say who, but
yeah. Okay. Fair enough.
Yeah. It's not Stephen.
Okay.
Not local either.
No.
Good. Yeah. It's and I'm guessing I mentioned this earlier in the show. I know when I deal with an underwriter, I get points for presentation. They know when Stephen Green's deal goes in, they know what it generally looks like. I'm guessing you guys get the same thing. So if CRA chooses to audit, just like my underwriters would know who Stephen Green is, I'm sure they know who Peter and George are, right, when they get a tax return. And you probably get those points.
And that's one of, right? I jotted down, that was one of the audit avoidance areas, if you will, in the sense of somebody that's doing their own tax return or using a known firm that has some issues. I mean, Revenue Canada tracks that type of thing.
I would say it's they may not know us fully. They probably know who we are, but that's not what you want to worry about. You want to know. You don't want to be with the firm that they know.
Yes.
Like, oh yeah, that's coming from that firm.
Yeah,
we're auditing it.
And most accounting firms, they're going to have good, solid reputations with Revenue Canada. It's not just George and Peter.
Yeah.
But again, there's been instances where we've seen in the papers the small discount shops, and There's fraud going on. Not that, and again, there's a whole bunch of them that are perfectly legitimate, no question. But there's a couple of Revenue Canada are investigating, no doubt.
Yeah, and it happens. I mean, and this doesn't happen with what I'm about to say, but I mentor some of the newer mortgage specialists, and I tell them, I said, listen, guys, when you have an underwriter call you, I said, don't forget, they might be working on your next 20 deals over the next few years. So, understand that you don't get mad at them, and they're judging you based on your reputation, the work that you submit. So, do a good job. They're controlling it.
Let's not kid ourselves. We could be aggressive. PDO would never allow us to be stupid.
Sure. Yep.
That's right.
It would never get through internal review.
Yeah, a reputation risk.
Absolutely.
Right?
That's 100%.
Yeah.
It's better, that client example, it was better for us to fire them than...
And I'm sure you do the same thing,
Yes.
and many other advisors where one client's position or the fees from one client don't justify the risk you bring to all of the others. And so all of our other clients are expecting us to weed these people out. Yeah. And it's beyond the moral responsibilities. There's a gazillion business reasons to weed these people out.
Yeah. I heard from one, as you guys know, I coach competitive volleyball, and I attended a session in December at a conference, and they were talking about starting up their volleyball club, and down there in the U.S. it's still more of a business, but they said, my one piece of advice is when you're starting up a new business, doesn't have to be volleyball, it has to be whatever you're doing, don't be afraid to say no to something.
Yeah.
Whether it's a client or a process or a new business contact, that's an okay thing, right? It's okay to step away if you have to, right? So
Firing my first client was liberating.
yeah, which is crazy to say, and you don't. Again, this is something I go through with some of the new mortgage specialists, where when you first start, you want to do everything, right? Got to do everything. No, you can step away because you're going to drive yourself insane, and just understanding that takes time. That definitely takes time. So, George, I'm sorry. I know you were talking about your top 5, and we went off on a different direction.
That's quite all right.
What else do you have on your list? Because I don't think
I'm
going to
say, you sort of hit on it, but I'll say it even more. Bookkeeping's number 1. Get your bookkeeping done. If you can't do it minimum quarterly, I always recommend doing it monthly, but if you can't do it quarterly, outsource it. Get somebody else to do it. Because if you're doing it the following April when you're doing your personal tax return, you have no idea what that expense was the previous January. You forget things. It's just not worth it. Yeah. And especially if you're doing co-ventures. If you're doing stuff with co-ventures, you better have your bookkeeping. Like we've seen, not one of our clients, but we've seen somebody fail who had 23 different co-ventures but didn't do the bookkeeping right and had to walk away. They went bankrupt.
Yeah.
You just...
Even I have a bookkeeper.
Yeah.
It's
the number...
If stay organized.
Either you... And I also say, how do you judge how the property's doing if you don't know the numbers? Mm-hmm. Are you making money? I don't know.
Yeah.
Is that a good property? Is that a good investment? I don't know.
Yeah.
I got cash in my bank. Great.
Yeah. And it makes everyone's job easier when everything is recorded properly. Mm-hmm. Again, I'm harping on this, and we're all saying this over and over, but it's true. I tell clients, man, stay organized. If I got to send down a deal and it's a dog's breakfast, 50-50, man. And it's not the bank's fault or my fault. It's how you're managing your business, right? And we have to give that coaching, right? We got just what you're saying. Great, we'll do it this time, but this is what you need to do next time, right? Here's how I can help you not get audited, right? Organize, so.
Yeah, I had 2 other items on my list there. And so one, just being file tax returns correctly. Don't make mistakes. I mean, it's as simple as it sounds. And don't get me wrong, as detailed as Peter and I want to be, etc., and it's not like we don't make mistakes occasionally. Fess up, do your thing, correct it, move on. It is what it is. You're not going to get 100% perfect every time. Now, you don't want to see a high error rate, of course, but occasionally it's going to happen. And there's proper ways to fix it so it doesn't draw the attention. And lastly, and this came as a little surprise to me, I guess, in terms of not the answer, but the source of the information. But again, Peter had referenced the real estate audit team, and a handful of years ago, I was interviewing her, just chat, because she's local and she was an investor as well. And basically she explained that a lot of their audits, not all of them, are focused on the individuals. It's lower hanging fruit. Whereas if you're using a corporation or an accounting firm, there's going to be, in most cases, a more reasonable potentially position, or at least not an unreasonable position taken. And so for the auditor trying to, again, Peter and I at times joke that some of them seem like they want to be promoted to prime minister the next day if they could just find a few more dollars on that tax return. So where are they going to look? So somewhere where they're organized and have a respected accounting firm taking care of their tax returns and financial statements, or somebody doing it themselves, or using perhaps not as sophisticated of a firm as they need to be. And again, the majority of non-real estate investors, their taxes are so simple that the discount firms are perfect for them.
Yeah, a couple of T4s.
Yep.
Yeah, no big deal,
absolutely.
We add no value to that.
Correct. So again, that's not a slam with those discount firms, and there's a couple of those discount firms that do a good job for some of the small, medium-sized businesses. But yeah, it's kind of making sure you're using those right individuals. But just that structure can be an indicator of audit rates. Again, and it's not that corporations don't get audited; they certainly do. But again, they're looking for low-hanging fruit.
Yeah, that's a really good way to put it. It's a really good way to put it. Because yeah, same with anything we do as well. I know our underwriters, same thing. They'll look at certain deals. Okay, this one here we got to really look through, right? So yeah, no, that makes complete sense. Anything else to add for that one?
I'm good.
I know you said you can go for hours.
Oh yes, yes.
Yes.
We can get in detail.
Yeah, if you want another podcast, we can do it.
That's another podcast. How to not get audited.
Yep.
Love it. We'll do it. I love it. Well, listen, thank you, both of you, for coming on the show. I've wanted to have you on. It's you are, and listen, I personally use you. I'm by no means your complicated investor by any means, but I know I've used you for years, and I know that you've always kept me not audited. Hopefully that continues. If anyone's listening from CRA, hopefully that continues. But if anybody wants to reach the both of you, and we will have it on the screen for the YouTube video, how do they reach out to you?
Simplest is probably an initial email. It's our first initial and last name, so PCUTTINI or GDUBE at BDO.ca.
Cool. I'll put that up on the screen for both of you. So that way.
Simplest, just introduce yourself and we'll go from there.
All right. Sounds like a plan. Well, thank you very much, everyone, for listening. And again, thank you to both Peter and George. And until next time, we will talk to you soon. And there you go. Thanks for listening. That was episode 14 with Peter Cuttini and George Dube from BDO here in Kitchener. Don't forget to follow us on Facebook and Twitter. The handle is RBC Stephen Green. And until next time, we'll talk to you soon.
Thank you for listening to the Green Effect Podcast. Subscribe to this podcast on iTunes or Google Play so you catch the next episode. And don't forget to leave a review. Much appreciated.